Welcome back to the channel and welcome back to another backtesting video. So we're going to continue from where we were, and just for transparency, I've added some journal entries. How do we get to the journal? So as you can see, hopefully this works. I've added the two losing trades, so we got a truer reflection of performance. And one thing just also to add is that erroneous trade here, as you can see, that I didn't place. So anyone who's joining this 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 video program, if you will, or what do you call it, playlist, this is not a trade that I placed. The system seemed to place this trade for a 54,000. You can see, look at the contract sizes, look how low this is, and for 54. So anyway, disregard that from the numbers. So I will be touching on that, at key points and so on and so forth, just so that we can keep in tune with what's happening there. But we're going to get back to the charts. So we saw the morning session transpire, and just reviewing our notes in terms of what we were looking for. As we noted, we were looking for three potential models. So with the market below the true week open, we wanted to see potentially, if we wanted to see higher prices, we want to see a purge of the previous day's low. We didn't get that. The market did not trade that far lower. And then ultimately, if the market confirms to seek lower prices because institutional order flow was bearish, then we would want to see a H1 displacement lower, and then see that displacement, and then potentially see a cracking correlation within that displacement. We didn't see that either. And the final one is if we had a higher time frame move lower. So for instance, if we had a cracking correlation below this H4 in relation to this SIBI, which could still form going into the PM session, so that's certainly viable, then we could potentially be looking for lower prices that way. So a couple of things: we would need to see that sort of rejection, which we haven't yet, and some form of displacement, so we haven't seen that either. And it's looking more likely that NQ is going to purge that high as well, which would in essence render each of those models null and void. So what we're going to do, just because we've got the charts marked up, and then we'll see what happens, and then we'll move into tomorrow if nothing transpires from this. We're going to continue. We want to see if there's a breakdown, which there appears to be there, but again, we're still in the lunch period, so I'm not really that focused on that. We would want to get into at least past 1:30 New York time to then determine whether the move is legitimate. I'm not really a fan of trading within the New York lunch, and there you go. So that's purged through. So all three models now, as far as I'm concerned, would not be permissible. So on that note, it would imply to me that we're likely going to seek higher prices. So with that, we're just going to go back out to the hourly. Going to forward on time. Let's go to the end of the session. It's kind of consolidated around there. So that would be the end of the session. And then we're going to head into next session Wednesday, like so, and then another one. And then now we're going to go back out to the hourly time frame, get rid of any of the sort of potential SMT levels that we don't require anymore, and then we're going to restart evaluation. So we've got a lot of stat liquidity above the marketplace, a lot of stat liquidity, and there was no imbalance here on NQ to necessarily support higher prices, but the H4 is bullish. But daily and weekly remain bearish. So anyway, we're going to get rid of this key price level there. We have got the previous day's low there. That's fine. We can just remove these for now. Move that one. And I'm going to remove that. And we'll sort those out when we get to the 4-hour and hourly time frame. Okay, so let's have a look and see if there's any key PD arrays that we need to add. Okay, so well, this here we can change that to the odd low daily. Okay, so we can change that. So what does that mean? It just becomes a more significant liquidity pool, because it's now, as far as I'm concerned, visible on the daily time frame. So a lot of residing liquidity below that key price level if it was to be targeted for any reason. Okay, so want that in there, and then obviously we've got this daily high there as well. And again, this SMT at the lows is just purely for reference. It's something that can be seen on the weekly, but I don't typically take that type of SMT, so or utilize that type of SMT, should I say. Relative equal highs appear in that SIBI, could potentially be a draw on liquidity. Nothing further to add by way of liquidity and imbalances here on the daily time frame. So we're just going to go and update the H4. I want to take this out here. It's not required. Take that out. Right, so want to get our highlighter tool. Okay, so got this low here. Want to check the highs. And we got that high. That high. Okay. So now let's just reference these key price levels. Okay. Just make sure they're not perfect. Okay. Now, looking at Tuesday, and we can obviously see that consolidation. There's no imbalances below the marketplace. So if there was a cracking correlation here, would be targeting the previous day's low and this low, potentially. So I'm not looking to add any other interesting. Where's that? Sorry, that's there. Oh, that's a key high. me. Okay, so let's get some notes down. It's a busy day in terms of news. 4th of May. So IOF hasn't changed from the high time frame. Still daily and weekly are bearish. Still daily and weekly are bearish. Therefore, we know that any move is counter. Any move higher is counter, and therefore we've got to exercise a level of caution. Okay. So we've got a number of factors. So what are we? So relative to the weekly and daily, institutional order flow remains bearish following the high time frame displacement, which was initiated by the high time frame crack and correlation, and then further reaccumulation from the SIBI daily. So if we just venture out here, we're essentially saying that there was a crack and correlation at the highs, and then we've obviously had the reaccumulation here, and it's within the order block and so on and so forth. We don't use, I certainly don't use order blocks per se for institutional order flow and stuff like that. You can, I don't. But ultimately, the weekly and daily is bearish. We also noted the weekly breakaway gap, which is here. Just for reference. Okay. And what we want to do is just okay, so that would be those two. So if you go out to here, then we can just copy that across, and we can make reference to that right here. Okay. All right. So that's the breakaway gap, which is overlapping with the SIBI, interestingly. So that's an interesting confluence. So now if we go down to the H4, we could certainly surmise that currently the H4 appears bullish, right? So relative to the H4 time frame, institutional order flow appears bullish near term, following the violation or disrespect, if you will, for violation of the first SIBI H4. So I'm looking at the first aligned SIBI H4, which is here, and I'm looking at that from the lens of, if we were bullish, if we were bearish, we would expect to see a level of support from here, right? But we haven't. So it violated that. So I'm looking at that as a potential indicator of higher prices, in near-term higher prices. Okay. Okay. So we're going to go to ERL, IRL. Now I think last notion of this was it wasn't clear. So we'll go out to the weekly first. Let's have a look. So if we're looking at ES and NQ, purge the lows. It's plausible that we could be trading higher. Oh, I've got this low in. Apologies. Especially if we're looking at ES, we could see near-term higher prices. So we could see ERL to IRL. But I would need to see that coupled with a Kraken correlation. So that's why I'm going to make the same notation. This is not clear at present, despite the high time frame SMT relative to weekly time frame. I would need to see a weekly cycle / monthly cycle high time frame Kraken correlation at the lows to support higher prices. Therefore, I will remain on the sidelines until something becomes clear. So we're waiting for that Kraken correlation, because although we've got this, I want to see something more near term to determine, are we going higher to a daily imbalance or so on, or see something at the highs, are we coming lower? I haven't seen that yet, so I'm remaining neutral. Down to the 4 hour. So I have noted the clean and clear swing points referencing the previous day's high and previous day's low, where near-term liquidity would reside. The previous day's high and previous day's low have formed either side of the true week open. Therefore, should one of those key price levels be purged, coupled with an high time frame Kraken correlation, this could support a high probability trade idea. Okay. So TO, currently all IFT members are above their respective true week open, supporting the idea of lower prices if coupled with an high time frame Kraken correlation. Okay. Kraken correlation, there's nothing present at the moment. Currently, there is no clear high time frame Kraken correlation present relative to the monthly cycle or weekly cycle. Therefore, I will remain on the sidelines until further information. has been presented. Simple as that. Okay, so let's just go and review again the monthly cycle. Okay, so we're looking, let's just make this a little bit clearer. Okay, so I'll go from here. Let's just use a blue divider. So we're there. Okay, so we're there, and we can sort of go back one more if, okay, right, so go out to the daily. So previous week high in here. So if we're looking at this, we've got that previous week high. It's the high of that period. So no cracking correlation there, nothing at the lows. We're looking at these lows here. There's nothing here. Prices moved, repriced lower on all assets. We've got this high here. We're looking at this area here, and again, if we wanted to, we could. So that would be Q3. So we could, if you wanted to, just mark it as Q3. It's easier that way, right? And then we can take the aligned high. So it'll be that one. There. And let's just get this one here, like that. See? So we don't, and this was the cracking correlation that was being sort of referred to, move lower. Okay, so we've got that. So in terms of cracking correlation, there isn't anything at present, right? When you're looking at, when we're looking at, you know, double check. In fact, let me just get rid of these. I'll tell you why. That's the weekly. Actually, let's put them back. Then go to the weekly. And then, so we've got this weekly high here. Why is this important? Because large institutions would likely have their stops resting there. So let me just go back to the daily. You know, I'm going to keep it as it was, just because I don't want to venture out to the weekly. Okay, so yeah, we're waiting for a cracking correlation relative to the weekly or monthly, and there is nothing at present. Lows are all symmetrical, highs are appearing relatively symmetrical. So we're going to wait. So we're going to drop down to the hourly time frame and have a look at what's been. Look how horrible this is, and this is indicative of the fact that we've got some high impact news coming today. But mostly in the afternoon it's going to be extremely volatile. So we're looking at price here. We've obviously got this London low. We want to, let's just make sure we haven't got any, no, okay, not presently. So So we have this low, London. Okay. Okay. So we've got that London low in. Okay. Now in terms of highs, I mean, this appears to be the highest high, and that would be the New York PM, which is this one here. Just double checking that again. Yeah, that's fine. So we're just going to mark this up. Now again, I'm marking it up more so for reference of a H1 liquidity pool being purged, because that is again important to, you know, the success of don't want that. Okay, so I want to put that one in. Now it has been purged, so we're just going to do that, which is fine. I want to do that as well because we want to take the most aligned highest like that, because I'm looking for symmetry. So already we can see what we're looking for potentially, which is a crack correlation at this high here. So game plan 1 is going to be that. Okay, so with price being above the true week open, if the market purges the previous day's high and forms high time frame cracking correlation and forms an high time frame cracking correlation confirmed by low time frame confluences, this could support lower prices. Okay, so that would be 1 because we're above, and that's the obvious one because we're above. Now again, if we were looking for counter trend to the higher time frame, I'd need to see this logo. Now, because of how volatile today is, I am going to reference that as a potential model. So it's the same model for what I want to see at the highs, but if price trades below the true week open, if the market purges the previous day's low and forms an high time frame cracking correlation confirmed by low time frame confluences, this could support a trade idea to see higher prices. Okay, so that's possible. So that would be the only model I'm looking for higher prices. That's all. If price, you know, expanded higher from here, it expands higher, it goes without me. It's not something for me to take. It's not from a key level that I would like to see. So the reality is that there are not many things that I would be looking for to transpire. Now, one of the things that could be interesting, say could be, is if we were looking at, just want to look at NQ for the time being, just add the middle line in. Bodies of the candles have not purged that middle line, right? So we see that. It's quite a large CB. In fact, I'm going to turn that on for all of them because they've all got quite a large CB. Okay, I don't do this for all of them, but for all the time. But now we can see this key price level here. It's been purged by on ES NQ, but not on YM here. Okay, so a potential trade idea could be, I mean, it's not one that I predominantly, but it's one that I should be aware of. Is if we get a cracking correlation at this imbalance, these two are in here. We get a purge of the previous day's high. In fact, I'm going to monitor that. All I'm going to do is monitor it. I'm not going to document it because it's not one of the models that I particularly prefer to see. But we have had, you know, that high time frame displacement lower back into here. So it is quite possible that YM just wants to get on going lower. But we have to see what happens. So let's drop this down to the 15-minute. Let's get some timings. So we've got here impact news there, and in most cases, you know, I do think the probability of trades that occur at equities open after equities open is significantly higher than those before. But you know, that's just me saying that, so it needs to be validated. All right, so let's move time on. Let's get to the high impact news. Stick with the 15-minute. I don't think this needs to go to the hourly. We'll refer back to the hourly, but we're going to go with this for the time being. And I'm just going to have a bit of coffee. Okay, so that's okay. So none of them have purged the high yet. Okay, I just want to stop that. Go and have a quick look at the hourly. So we're at the we've had the high impact news. We've had the news embargo now. Nothing. Again, we're looking for this key price level here, or lower. I'm not looking for anything else. I need to see a high time frame cracking correlation, and we haven't seen it yet. So we wait. Certainly looking further bearish. No, so I'm not interested in anything. Wow. Oh, hang on. Bloody hell, I've over clicked. Equities open. Well, NQ is in real close proximity to its previous day's low, so that's interesting. I'm going to drop this down to the 1 minute. To be fair, it doesn't particularly matter. There wasn't a trade. What I'm going to do though is I just want to remove the midline, because it's just, I keep looking at it and thinking, what's that other line? So I just want to move that for now. Okay, so back to the M15. So we know what key levels we're looking at, we know what we're waiting for if we don't see it. Although a H1 displacement from here, don't think there's a fair value gap there. Maybe there is. Just going to leave it on the hourly time frame for now. Let's just see what NQ wants to do, because it is in close proximity. Okay. So NQ is tapped. It's a very shallow tap, which could certainly indicate that it might revisit there. So it's now sort of left relative equals, but let's continue. Okay, not seeing anything remotely worth could be interesting. Let's see. Okay, so just going to mark this imbalance up. Okay. Still a lot to see, but I like the fact that a potential Kraken correlation could be forming between ES and NQ. So let's just see, but we want to see how it reacts to this CB here. Does it reject and continue lower? So look, which it has. So unlikely to see high prices. I'm going to pop back out to the hourly to see what's occurring. Okay, and we're seeing that this could be a breakaway gap. Because of the M15. Okay, that in there. Interesting. Okay, so we're getting outside the trade execution window. And we're outside that trade execution window. So let's see if it looks as though we're likely to see lower prices, and that is going to in fact be this is going to be a breakaway gap. Okay, come out that. Actually, we can just label that. This is not a day that I particularly prefer to avoid these real high impact news days, just because I just find that, you know, some people find opportunity in these days. I just don't like the necessary inherent risk that they bring. But that doesn't mean that they're not opportunity days. Of course they are, you know. But whilst NQ is, let's go back out to a 5 minute. See, so what we're seeing here is there's never an up close candle purging a down close, so that's supporting the idea of lower prices here. Now that would be our first indication. We'd want to see, we get into that lunch period, we'd want to see an M5. So I would probably do that. So, interesting. With that displacement higher, you could argue that these two represent the bullish order block, and then you've got obviously all of this that's representing the bullish order block. And look at how YM traded below the true week open. Sorry, YM ES traded below the true week open. So what I'm referring to is this here. Potential. This would be here. Taken out quite a bit of liquidity below the marketplace. Hell, they've taken out the daily, so that is, let's see. Okay, didn't but it potentially is going to confirm this one. Okay, so confirm that order block. It's in the lunch period, so although I think that this could move, I'm not going to engage. It's during the lunch period, so we'll just see how this pans out. Wow, you would have got tagged. You'd have probably been at break even there. Let's have a look. Yep, sure would be break even. Targeting, let's say that high for now. Yeah, it did get there. Probably going target now the previous day's high. Now look at that. It's before the news. Just before the news. So it was, although it was the lunch period, it was a trade. It was the setup that we were after. It's one of those. It's outside your trade execution window. You don't really want to take it during the lunch period because it's the lunch period. But you know, it does does often bring that topic into debate, which is, you get some of these esteemed traders from yesteryear who still trade to this day. They say we don't waste our time with trade execution windows and time of days. If our setup sets up, we take in the trade, and this is a perfect example where that occurred. That absolutely occurred. Something to bear in mind, eh? All right, I'm going to leave this one here. I'm going to leave this one here. We'll have a look at what the news does afterwards. That's a shame, because that was the model. That's what we were looking for. And because of the time of day, I didn't take it. So again, that's something to bear in mind or think about is, is it just a case of when your trade setup forms, you just take the trade, and over a large sample size, time of day is relatively irrelevant, you could argue, but you can't just take that on one trade. But it was a really clean setup. I mean, we had all confluences. There's the M5 displacement. Yeah, it's probably definitely worth taking. 2-1 would have been nice. Anything extra? It's going to purge the previous day's high, and then. All right, I'm going to leave that here. This was a really interesting one. It's kind of a bit annoying, if I'm being honest with you. Again, it's one of those that if it's outside the trade execution window, is it worth just taking it on a reduced risk trade? Probably. So, yeah, one of those. So I'm going to leave this one here. A lot to sort of mull over during the interval of this one until the next episode. Hopefully you enjoyed it. I think we were pretty savvy in terms of our analysis of the market. Pretty accurate with what we were intending, what we were looking for, all the key price levels and stuff like that. And ultimately a trade represented itself on ES that we didn't take because it was in the lunch period. But again, I'm going to mull over that and have a look at whether it's worth low risk half risk trades when it's outside the primary trade execution window, and we sort of go from there. So with that being said, I'm going to leave it here. Hopefully you've enjoyed this episode. Hopefully you've taken something away. If you wouldn't mind liking and subscribing to the channel, I'd be really grateful. And guys, I'll catch you in the next one.